So hey guys, and welcome to week 3 of our crypto trading and bootcamp. I'm Renee. I'm going to be taking you through this week, where we're going to be looking at different types of indicators that I like to use in my trading to kind of get you started. So let's just do the little prelim stuff like we usually have to do, the little bits of warnings and everything. Oh yeah, of course, we are recording all of this for you guys to see, and make sure that if you haven't seen the previous weeks, they are all there. Make sure you go to the group. Everything is linked in there for our YouTube channel to go and rewatch all of those previous weeks for me and for Danielle's as well, of course. So here's our little quick disclaimer. This is going to be a lot of information, and so please stop me at any point. Please ask lots of questions. Ask me to go over stuff if you're not understanding it. And of course, you can always ask questions in the group if you need more clarification or anything afterwards. This is going to be very interactive. Like I said, we're going to go through the slides quite quickly just to kind of give you an overview of the different indicators that we're using. Hopefully you watched the video last week to kind of give you a little bit of introduction of how what indicators are. And then we're going to go into TradingView and spend quite a lot of time in TradingView actually looking at the indicators and how they work. And of course, always be careful, beware. There are scammers everywhere. Never give anyone your seed phrase, all that sort of stuff. Just always be really super, super careful when you're on the internet and you're dealing with crypto. And this one. Oh, here, of course. This is our disclaimer. So warning, warning. This is not financial advice. I'm not telling you to do anything. This is just for educational purposes. Always do your own research. And of course, this is not financial advice. Just an FYI, we do have an online event for you guys tomorrow if you want to check it out. So All Things Blockchain is doing a AMA online with Wallet V, which is a crypto wallet that actually uses Hyperledger, I believe. So it's all like DeFi wallet, completely. It's a kind of a weird hybrid custodial wallet. Really, really interesting. I've been using it and playing with it, and it's actually been really interesting. If you're into DeFi, you can trade on pump.fun. Like there's lots of really cool things that you can do with it. So if you want to check that out, that is going to be tomorrow at 7 o'clock. And all that information is on our All Things Blockchain Luma. If you'd like to check that out on the calendar right there. And of course, we've got our leaderboard with our points on the group. So if you guys put your hands up, if everyone's been following along in the group and you've all seen your points and following the leaderboard and everything, hopefully you guys are completing all of your quizzes and doing all your fun stuff and really getting involved. I've seen quite a few of you actually being involved. Yeah, perfect. Thanks, guys. Yeah, so always check that out. And yeah, keep interacting on the group and have a chat. And I really like seeing you guys support each other and comment on each other's posts, which has been really great. Boop. Just to kind of give you a little bit of rundown where we are. So week 3, indicators and Confluence, this is where we are. And then next week, we're going to go another step further and look into candlesticks. Now, hopefully by now, everyone's got their demo account. Has everybody signed up? Just put a Y in the chat. Have you all got your demo account? You've all been trading, practicing your trading on your demo account. We got yes, yes, yes. Perfect. That's good. Okay, perfect. Yeah, so we will be I'll be showing you a lot of stuff in Bybit and then in TradingView as well. So you can do, again, trade and practice as much as you want without risking any of your own money in the Bybit demo account. So it is a really great opportunity to kind of get familiar with the platform, how it works, how to put the indicators on, how to buy and sell, how to use your stop losses, all that sort of thing, without any risk of losing your own money. So yeah, definitely highly recommend getting your demo account before you actually start trading. Because if you're used to, say, an Australian platform like our normal platforms, to go into the Bybit platform, it's quite advanced. And so it's going to have a lot more advanced features than what you would have, excuse me, if what you'd probably be used excuse me, what you'd be used to if you're just using like a traditional, more simplified spot trading account. So definitely highly recommend getting the demo account and playing around with it risk-free. Awesome. So week three, this is going to be about indicators, and so I've picked a bunch of looking forward. I've picked a few basic indicators that I use every day on my charts. Once you start trading, there's a million different indicators, and everybody has their own favorite indicators, and they all use them slightly differently. Everybody uses slightly different inputs to change them slightly. So this is just a very general overview of what I use and how I use them. I've collected them from all different people over many different years, and use them in different ways that works for me. And so hopefully what I can do is just show you how to use them, how I use them, and basically how useful they are in generally for trading. So we're going to look over in more depth. We went over a little bit in the previous week, but moving averages, how to use those moving averages, the VWAP, which is the volume weighted average price line, the MACD, which is another oscillator indicator, stochastic RSI, which is another oscillator. Oscillators basically ones that just go up and down, and then how to use them together to create confluence in your trading. Sweet. So the first one we're going to do is the series of moving averages. As I said last week, I did go over a few of them and how they work and over those different time periods. So we're just going to go over a little bit more in depth on the charts of how I use those. The VWAP, so you'll be really surprised by once you put this line on how much the price actually interacts with VWAP. So it's a really, really good indicator to have just in general, and it's one simple line, and you'll find like it really does just correlate really well with support and resistance levels and trending. So the MACD, so this is a modified version of the MACD. The MACD usually has a histogram, which is like the little squares. So usually see it looks like little pyramids going across. That's the traditional MACD. I just take that off because I don't really use it, and I just am left with the lines and use those lines instead. And I find it works really well to, as you can see in this image, this is called a divergence. And so it creates a lot of really nice divergences, and it also creates a bunch of different M and W formations, which you can actually see on this one. There's like a little W formation right here. So I'll show you that those are the two main ways that I use this MACD, is to see the divergences and to see other formations inside of the lines of the MACD. So if you guys want to grab your pens and take some notes, you will get, this of course is a slide deck, but if you want to write these down just to kind of input them as we're playing, if you're going to be playing alongside with your own trading view, these are the inputs that you put into the MACD to get them to look like mine. So it is quite different. And again, you want to take off the histogram, which is this one at the top here. So you want to take off the histogram. And then I just use these colors. You don't have to use these colors. They're just the ones that I use because I like purple. And then these are your different inputs over here. So there's the three. When you go to settings, you'll go to inputs here, and then the style is the colors on this side. And then the last one we're going to look at is a stochastic oscillator, stochastic RSI. There's also a normal RSI, which is very, very popular. People use all the time. I just happen to like this one a little bit better, and it just visually works for me for what I'm trying to use it for, which is to find periods of things being overbought and oversold. And then you'll also find it is actually quite good at creating divergences as well. So it's another way to show strength or weakness in the price at certain levels. And then what I'm going to do at the end is I'm going to show you my chart and how I put them all together. And then I'm going to go over my trades for the last couple of trades that I've done and show you how I use those indicators to then get those results that I did. Cool. So I'm going to switch now to yeah. Okay. share. Going to do this one. Okay, so this is my Bybit demo account again. So this is actually a trade that I entered in last night. Again, so this is a $200,000 trading account. And basically this was last night. We had the CPI news come out last night. So the American inflation news came out last night. So we're actually going to go over fundamental analysis in a couple of weeks and show you how to use fundamental analysis to help you with your trades. So usually when this happens, there's some sort of price movement. And so what I did is this is 11 o'clock last night. It is quite late for us. So usually the news comes out at 10:30 p.m. in Australia. So it is difficult to often stay awake for most people, but a lot of times it can be worth it to get these entries, especially when you're using the fundamental analysis to get into these trades. So we actually had this little dip down here, which is the manipulation around the news. I got in quite here and then went to sleep and then woke up today and we are up almost 1,000%, which is basically 100% at 10x. So again, I use 100x leverage. Well, this one's actually 75x, but it's only a very small amount. It's only $600. So to kind of give you an example, high leverage, but small amounts of money. And you can get really good returns. And this is WIF, so dog with hat. It's a meme coin. Really has no real value at all, but I just like it because I like dogs, and so I trade it. That's really all it's got to go with. It's a meme coin, it has no actual value apart from trading it. And yeah, just had that manipulation around the time there. And then so we had that move. To just answer the quick question while we're in this platform, you'll find that over here. It's over here somewhere. We had a question before about fees, and I'm just trying to see if I can see it on here somewhere. No, I can't see it on here. But in general, Bybit has 0.555% per trade. So say you're putting on $100, it's gonna be $5.50 per $100. I think. Is that 5? Let me do the math. I have to do the math. No, maybe it's 50 cents per $100. Yeah, I think it's 0.55. So you can work that out. Let's have a look in the calculator. Does calculator do it? Target price. No, the calculator doesn't do it either. I do have a spreadsheet that I'll be giving you guys later on when we're doing our journaling that you can put in your prices and it will actually work out all of the fees and stuff for you. But that will be coming in a few weeks. But just in general, let me just do a quick trade for you real quick. Let's go on ETH. And again, this is a demo fund, so it doesn't really matter. I've got 10x. I'm going to do 1 ETH, which is 4 grand. Make sure I put on my stop loss. Okay. One of the things, this is my Haro Trader account. You automatically fail if you do not put in a stop loss. So you really need to always remember, it's really good practice and good habit to get into is to put on your stop losses. Every single trade without fail, do not even stop go, do not pass go, do not collect $200. Always put your stop loss on before you do anything. And then what I'm going to do, so I've got 1 ETH, stop loss on, I'm going to go long. And so, yeah, so there's your fee. So $2.50 out of $4.50 if you want to do the math real quick. Pretty sure. So that's 250 divided by 460. Yeah. So it's 0.055%. So if that's the math. So it's very, very small amount. So you put in $500 and the fee is $2.50. So it's 50 cents per $100, something like that, if you want to think about it that way. Hopefully that's answered your question. Cool. Perfect. And then the good thing about Bybit too is you can actually just manually put that up there if you want to as well. Cool. That might actually be a good trade. ETH's been going like crazy, like gangbusters, so I'm just going to leave that there anyway. But so like we had said before, this is the trading view inside of Bybit. You can use the inside of Bybit to do all of your trading if you want to. But I'm going to actually take you into the actual trading view just because there are some more advanced indicators that I like to use, and then I'll show you how to use them as well. Oh, awesome. Okay, everyone can see my screen. I'm gonna put this up here. Huh. I don't know. I don't know what I did. Stop sharing. I'm gonna try and fix it. There's my screen. There it is. Okay. There we go. So this is a very simplified version of the way that I trade and the way that I look at the screen. Just give me 1 second. Just give me 1 second. I'll turn some more lights on. There we go. There we go. Now I'm going in and out of focus. There we go. Bit more shiny, but so when we're going through having a look, it's a lot to kind of look at all at once. So what I've actually done is I've split it into individual indicators to kind of show you guys how they all look individually. So it's not kind of as overwhelming as it would be all at once. So we're going to start over here. So if you guys remember, this is my trading view. Sorry, my trader's reality indicator. And so if you have multiple charts like this open at once, you can actually expand it to take up the whole screen using this button down here. So that's what I'm going to do here. And I'm going to expand that. This is Bitcoin on the 15-minute time frame last week. And this was the long entry that I took at 112,000. I'm going to show you how I got into that. If you kind of see, this is the move now. So how did I know how to get in at that price? So this is kind of the moving averages that are in the trader's reality like we went over before. So it's the 5, the 13, the 50, the 200, and the 800. So the ones in here you can see is the 5 and the 13, the 50, the 200, and then the 800. And so what we saw down there is a break basically of the 50. That is the first entrance here. So this is a very strong move here. If you weren't already in and didn't have this indicator on, I actually got in because of this indicator, which is we talked about as the PVSRA candles, so the colored candles. This is number one indicator of like, oh, something interesting is happening here. Pay attention to this time is like when you see this like morning star kind of kind of reversal candle that's a colored candle in a W position formation. So this is a W. So these are the first in the steps of things that you're looking for. So we're getting a W formation, we're getting manipulation candles, and then a candlestick in that formation. So this is already like these are like things are happening. This is like, okay, there's something interesting is going to be happening. The next thing we have over here, this is the VWAP. So you've also got this break of the VWAP here. So that is also a strong move with this candle formation in this W formation, breaking through the VWAP. Again, confluence, things that are like adding on top of each other to show you that this is going to probably be a really good move. You had these moves over here, but they never really kept going. They just failed. And then you have a rejection at this level as well. You see it's acting as support this whole time, going through, acting as support, acting as support, acting as resistance. You see a lot of times you'll get these sort of moves. So VWAP in general, it'll kind of hover near it, or it will act as support and resistance in many different ways as you go along. So again, that's another confluence of an indicator, a strong break at that point, and then continuation up. This is one of, again, my favorite indicators. This is the modified MACD. So we've got this formation, we have a candlestick formation, we have a break of the VWAP, and then the one thing that I keep talking about is this thing called divergence. So divergence is basically when the indicator does one thing, but the price does another thing. So if you have a look here, this actually came down further than this. So you'll see this low is actually higher than this low. Sorry, this low is lower than this low. But down here, you've got the opposite. So this low down here has come down way further than this second one, even though technically it came down. This is what we call bullish divergence. So the indicator is showing one thing, but the price is showing another thing. This is massive and usually showing the bottom of a move. Not always. Again, not all indicators are perfect. Not all the indicators work 100% of the time, but they add to the confluence of different things happening. So there is one over here as well. You can kind of see this is one here. This is one here. But you don't really have all the other stuff as we'll go through at the same time. It's just not as nice as this one either. So you'll see them happening quite often, but then you've got to use all the other indicators together to give that confluence to then give you confidence in that move. So this is the next one. We've got bullish divergence on our MACD indicator. And then over here, this is our stochastic RSI. So again, underneath this line in green means we're oversold. Like we've gone down quite a lot and we're in the oversold range. So in general, we'll be looking once we hit these ranges for a bounce. So what we've also got here is another bullish divergence in the stochastic RSI as well. So we've got a lower low here with this low. We've got the lower low here, but we've got a higher low, which is showing that divergence. So when you see all of these things together, so just to show you there. So we've got W formation. We have the PVRSRA candles with a candlestick formation. We have breakthrough of the VWAP. We have divergence on both of our main oscillator indicators. This is a very strong confluence of the indicators to show that there's a very good chance that this is going to be a big move. And then, of course, like once we see it, this is from here. That's a 9% move. So when you have all of these things together, I try and use the 15-minute and the 1 hour for your swing trades. Um, so you might even want to start on a bigger time frame if you're doing longer moves. But for the swing trade moves that I use for during the day, I'm going to be looking at the 15-minute and the 1 hour time frames. If I'm doing scalp trades, that's when I'm down looking at the 15, 5, and 1 minute charts. So this is just a good example. This is a trade that I still have open because I still think that we're probably going to make a run for the all-time high. If not, I still have taken most of the profits on this trade in particular, but I always just try and like leave a runner in case it does keep going. The other thing is that if you still have a trade and you get so say it comes and retraces down here, it'll if you rebuy in, it'll give you a better entry, and so it'll be able to reduce your stop loss if you still have a position open. Okay. Now I'm gonna do this move here, which is how could we have known using our indicators that this move here was probably going to be a peak for at least in the short time frame. So we'll start again. Here. Oh, should I do it here? Yeah, I did here. So here's one I prepared earlier. So this is the peak, the attempt at the all-time high, which happened on Monday. So this is 122K. And then these are our moving averages, as you can kind of see here. You've got a really big push away from moving averages. You've got a break here, and then you've got your failure, I guess. So as you can see, all of these candles are green candles. So these are the manipulation candles. Like this is not a natural move. These are being very manipulated. So it would have been a combination of one, the market makers pushing the price up. But this is also what we call a short squeeze. And so it causes a liquidation cascade, which is what happens when high leverage traders have their stop losses and the market makers actually can see them and they actually aim for them. And what happens is when the market makers push their price into those stop losses, they cause a cascade, and one stop loss pushes the price up, because what is the stop loss on a short? It's a buy. So you then have all these buys like from people's like stop losses being hit, and you get moves like this. It's called a liquidation cascade. And so this is basically what happens here. And once all the stop losses are taken, they run out. And then basically this is when it starts to peel over and come back down. So whenever you see these big colored candles on your indicator, you're either going to be like, okay, something's going on here, time to pay attention. We've got some more here. These are like little fake out moves up. And then we basically have a big push down the other way. And you can kind of see there's lots of red candles here. So this is, again, manipulation. This is the market makers pushing down, pushing down, pushing down. So again, very, very manipulated move. Short squeeze, liquidation cascade, all the things happening. You can see here you're getting pushed through the VWAP. You're kind of hunting a little bit of consolidation here, and then we're actually getting that rejection. And if you have a look here, there's a perfect rejection of the VWAP here. So even on the moving averages, you're getting the similar kind of thing. You're finding the rejection and then support levels on both the moving averages and on the VWAP. So you can use these as both of those areas of confluence. On the MACD, again, what we can see is like, it's not really divergence because technically this is lower, but you can kind of see that's like, it's even going sideways, but you're getting this massive decrease here. So it's a divergent in extremes, I guess, if you want to put it that way. So this is actually a good use of where I would use the MACD, the second peak. So we will go over the one. M and W formations, like I keep talking about. So W formations happen on the bottom for reversals up. And then you have your like M formations at the top for going down. So while this is going sideways, you can't really say much is going on. This has kind of got your M formation. Yep. So let's make that red. So you're looking for these kind of formations in your chart, but also inside of the indicator. So this entry here would have been the perfect entry for a short. And you also have the confluence over here. You're massively, massively overbought on your RSI. So you can kind of see here, like this move here, very manipulated, really, really crazily overbought. And what do we have here as well? Inflammation. So you got an inflammation here, an inflammation here. We've got way over the VWAP. So another thing with these sort of indicators, the further away they are from the indicator, the more likely they are to reverse back. So in general, they like to keep an average and they're kind of almost drawn towards these indicators. So if they're very far away, there's a good chance at some point soon it's going to come back to create that equality with those indicators. So the 50 moving average has that property as well as the VWAP, both of them. So if they're very far away from the 50 or very far away from VWAP, there's a good chance you'd be looking at some sort of reversal in the short term. Excuse me. So if we're looking at our indicators here, we've got the manipulated move in our candles. We've got very far away from the VWAP. We have extreme moves on the MACD. The M formation like this. Also, this break underneath the yellow line I really like. So if it either breaks above and bounces off or breaks through, breaks down, I'd like that as a kind of confluence move. So we got the move there and we've got the move there with the very, very overbought. So we've got a confluence of different reasons that this is probably going to be a peak out of the move. And so, Jesse, the indicator on here, it's called Trader's Reality. So if you go TR main, if you go into indicators, it's called this one. So if you guys, if I didn't get this the other day, so Trader's Reality is one of my favorite traders. He has a YouTube channel, he has Twitter, all that sort of stuff. Highly recommend if you want to learn more about, he calls it the hybrid system, because it's basically it's called the market maker method, but he has mixed it with a bunch of his own personal experience as well, and he calls it the hybrid model, based on the market maker method. So him and his friends actually created this indicator based on all of his training and his insights to create this one indicator, which has all of these different indicators built in. So again, it's really good if you have the free versions of TradingView that you can get this because it's a whole bunch of different indicators in one. So you can still have multiple indicators without actually having them. Because yeah, you only get like 3 or 5, I think, on the free version. I have the premium version, so I think I have a million. It's very expensive though once you get to the premium levels. So if you can try and get away with it at the start and use the free versions, this is a really good hack to kind of get them all kind of mixed in. And then the VWAP, obviously, so volume weighted average price, it's a standard indicator, very standard, like it's just everywhere. If you just type in VWAP, VWAP, it should come up. And then we've got, that's the regular RSI, stochastic momentum index. So SMI is that one. So that's the stochastic momentum. And then MACD, where is he? Yeah. So moving average, convergence, divergence. But again, if you type in MACD, it should come up. But that's like the full name of it. MACD is just like way easier to kind of doing it that way. Awesome. Perfect. And yeah, I'm pretty sure if you just want to have a look, PVSRA. Yeah, so if you just type in PVSRA, that will also just bring up the colored candles. So say I'm on my chart here. This has got my VWAP on it. No. override, maybe that one. That's the volume. So this is actually Annie's version. So Annie is from Trade Travel Chill. She's the other girl that I talked to you about. She's Australian. She's awesome. Uses the same method called the market maker method. So she uses this one, and it's exactly the same. It uses the same basically mathematical formula to kind of create this. This one actually has the volume attached to it, so you can kind of see the combination of the volume with the movement. So this for me would definitely say this is the liquidation cascade. If you have a look again, so with the PVSRA candles, it's not the amount of transactions, it's the speed of the transactions. So basically, again, it's bot trading, algorithmic trading, it's not real trades. But because there's so much actual volume in these, this is where I would say this is like a liquidation, like a bunch of people getting liquidated. That's why the actual volume is so high. Because like you can have like, see this tiny blue candle here, tiny, tiny, tiny volume, but it's still changed color because it's the speed of the transactions, not the amount of the transactions. So using them in combination, again, it's another way to kind of use those confluences to help create patterns and like being able to make decisions based on those different things. Awesome. So I've gone over all of those 4 indicators. Is there any other questions right now, or is there maybe again a coin or a token that I can look at and see if we can use these indicators to kind of do a little bit of analysis on that token? Anybody? Can do my whiff. So again, like this is my chart, how I trade when I'm doing my day trades. Like it can be, it's really crazily overwhelming. But I can show you basically how we came over that trade yesterday. Gonna use this one. Just to do one time frame just to kind of. So when you have multiple indicators, if you just double click on the screen, it will just highlight that one particular indicator that you used. I have a couple other ones on here that I do quite use a lot. This is called a BBWP. So BBWP, it's a volatility index. And so it's basically like, if you guys have heard of Bollinger Bands, it's a variation of a Bollinger Band. And it shows the intensity of the movement and the power behind the movement. So in general, like you want them to be, if you want to move to be strong, you want to start at the bottom and then push up. And so that's showing intensity and movement up into that. This is the ADX, which is a directional indicator showing like obviously green is up and then red is down. I use them for crosses. So showing this cross here is actually a show of strength in that direction. So if I show you here how we got that move the other day. So got in here, I think it was. So all we've got here is extreme volatility. So this is like really, really strong move. A lot of the time, once it hits this line at the top here, which is like 70, 80%, it will continue pushing. So this is actually, if you didn't always match up, like this is going to be a bit of what I would call a fake out move because the push has gone down and then it's reversed. That's the volatility. So if it goes into this overbought kind of like intensely red line, that's actually going to be a strong, strong move. And what we've got here, we've got a break of our MACD. So what have we got here? This is like, it's kind of like equal. It's not quite a divergence, but it's still like, oh, this is interesting. This is pushed way down further, but it's really not going down, which is showing a weakness in the indicator. So if this was actually a strong move, this should continue to go down. Like if you're seeing this move here, we're getting these continuation pushes down. and we're getting continuation pushing down on the MACD. Whereas here, we've got a big push down, but not on the MACD. That's showing weakness in this move. We've got an oversold indicator here on our RSI. And then we have the cross. So this cross on its own is in general showing a movement up. So you don't always get the divergence. Divergence is an extra confluence of something. But in general, once you've got that cross here, you've got the cross here on the MACD, and then I've got a cross here. For me, that's like a really strong indicator when all of those indicators line up. Again, it's that confluence. All the indicators lining up, all telling the same story in their own different way. So again, we got the cross on the MACD, we got a cross on the SMI, and we got a cross on my ADX. Plus, got a cross of the 50, got a cross on the VWAP. Again, so this is like, okay, this is all showing really, really strong movement. And I'm pretty sure I got in around here on this bounce off of this movement here. So that's just another example of like showing the confluence of like when all the indicators line up, they're all telling a story of like what is going to happen. And so that's when you've got to make your decision of like, okay, this is looking like a really good trade. I'm going to take this trade. And so, yeah, that was basically my trade from last night that I caught. Again, fundamental news as well. So there's like a lot of a lot of stuff going on. There's all the different indicators plus the fundamental news you then have to incorporate as well. But that's just another example of like, yeah, how to use different indicators and how to get them to all match up so that you can see the story that's being told. So the free trading view, that's why I said you'd get this indicator called the trader's reality indicator. All of these lines on this chart here is all that one indicator, apart from the VWAP. The VWAP's that one. And then this market sessions is down here, which is just basically, so I will go into this when I'm talking about my personal method, which I call Artemis. It's a session-based trading to add on top of all of this sort of stuff. So that one. But I only have that trader's reality indicator on now. All of these indicators, apart from the lines, obviously not this one, is all one indicator. So with TradingView, I can't, I'll have a look, but it's either 3 or 5 indicators you get for free. And so if you have this one indicator, you've got 5, 6, 7 indicators all in one indicator. So if you start with that, you're going to get all that basic stuff. And then so you add on the VWAP. And then you don't necessarily need to have them all on the same chart at the same time. It might be too much for you to kind of have them all at once. So what you can do is experiment and see which one that you like. You could either even do it this way too and have them on different screens. I think you can have like maybe 2 for the free version. Maybe we'll have a look. I might actually do that as an experiment. I'll get another free account and I'll try and set it up with the best way to try and get as many free indicators before you have to start paying, because it's not super expensive, but I still think it's like $10 a month or $15 a month for the next step up. If you're going to be a serious trader, it's definitely, I use the min version, like the minimum paid version, for a very, very long time, and that was usually fine. But once I started getting into multiple time frames like this is when I found I needed to go to the next level to get the next level up. But that's actually a challenge. I might do that for me. I'll try and figure out how to configure all this for you guys with the free version so that you can get the maximum amount of indicators for free while we're doing it at the start. Awesome. And then you guys want to have a look at Solana. So let's do that real quick. We're back up. Did I get past it? There it is. I have my I have my tokens in level of volatility. So ADR is their average daily range. So basically at the top is really low ADR, so they're not super volatile. And then all the way down the bottom is my crazy meme coins that have like a lot. So Sol's like in the middle because sometimes it has crazy days and then other times it doesn't. See, Sol.
Hey, Renee, just keep an eye out on the waiting room. There's a couple people waiting to come in.
Okay. How do I see that?
I just let them in.
Okay, cool.
Yeah, but you just got to keep an eye on it. It should pop up on your screen.
Yeah, I didn't see, but I wasn't looking at that screen. Sorry, guys. Sorry, guys. Hi, how you doing? I was looking at my other screen. But luckily it's all recorded, so we can come back and watch it again. But I'll try and keep an eye on that for you guys. So let's have a look. I'm on the 15-minute chart on Solana. So let's see if we could have caught this move on Solana. So so this is our moving averages. So with moving averages, they are usually areas of support and resistance. And in general, they always like to come back and reset to center. As you can see on here, the 50 is like the way it always comes back and forth, back and forth, back and forth. It's like always stays pretty close. This is an extreme move up. But what we're seeing here is breaking through all of these moving averages here is a sign of extreme strength. So this, with the candles, already is showing me this is like an extreme strong move. Where this is kind of a weird W formation. It's like a triple bottom. And then we've got this bounce off of the 50. So this move here is a very standard kind of bullish impulse move. So you come up, you break, you retest, you touch the 50, and it's actually touching the 50 and the 200 and then pushing off. So this is a very strong move. And you'll see this move a lot, especially in this formation like this. For us, this would be the entry. This anywhere around here is halfway through this move would be a good entry. And the fact that you've got the green candles with this as well is another level of confluence. So this is a very good entry point for right now, just looking at these candlesticks. But what we're going to do is I'm going to add on my VWAP. So let's have a look. How's my VWAP? So again, VWAP is the yellow line. And so what is this? So now it's bounced off the 50 moving average, the 200 moving average, and the VWAP. So this is like, again, another massive level of confluence. When you see this move, if you didn't catch this move here, which is you'd call that an early entry point, if you didn't get that, this is a really, really strong secondary entry point if you didn't get these early entries here. Next one is going to be, actually, let's do MACD first. Okay. Okay, so straight away, we're looking here. We got a down move here. We got lower lows, and then we got sideways. What's the MACD doing? It's going up. So what have we got? We've got our bullish divergence. We've got the MACD making higher lows. We've got the actual price making lower lows and sideways. So this move is losing momentum. It's showing weakness and it's actually turning into an upwards trend. So by looking at that indicator straight away, you can see this is losing momentum. There's probably a good chance that at some point it's going to fail. Like I pointed out before, this move here, once you get this move here, which is the push up and then the bounce off of the top of the MACD. This is a really strong kind of push. If you are making a higher high with a push off of here. And again, you'll see it's right in that area of like support. So we've got price coming down, price weakening. We've got the MACD getting strength and to push up, bullish divergence. We're having these manipulated candles here. We've got a higher high on top of the MACD, bouncing off VWAPs, MACDs. Again, so much confluence that this is going to be a massive move. And then we're going to just go to this one. And lastly, this is our stochastic. Again, you're seeing this one here. You're getting like a slightly lower push here. Which is like, again, this is going, it's you call it a hidden bullish divergence when it's kind of going sideways and then that. But again, you're in that oversold area. You've got the cross here. So this would actually be, if you wanted to get the early indicator, again, it has more risk. It is a riskier move to use these indicators earlier without the confirmation. But if you're looking here at this point, you've got the cross on the RSI, you've got a cross on the MACD. That would be your first indication to kind of look that this is going to be that move here. And then probably that entry there, that green candle, the break of the 50, if you're going to be aggressive, that would be your entry point, because then you've got those levels of confluence. The cross over here, this cross here, cross on the 50. That is an aggressive entry. Again, could fail, but once you got this confirmation move here with all this other stuff, yeah, that would have been a really good entry for you to get in. Does that make sense, guys? Hi, Karen. Thanks for coming. Awesome. Does that kind of make sense, guys? So you're kind of looking for we say confluences, all the indicators lining up to create a story to kind of show you what's happening with the price. Sweet. Awesome. So yeah, let's go back to my slidey slides. Wait, let's have a look. Nice, look at our ETH trade, guys. Like, we're making money. Well done, well done. So we did great with that trade already. I should have put more on. That's awesome. Okay, so oh, share. Awesome. Great. So next lesson, we're going to dive even deeper and we're going to go into more of the candlestick patterns. We've mentioned a few going through the charts, but going to go into more detail on how to identify those candle formations and then how we use them to create a story and create that narrative on what price is going to be trying to do. So that's next week. Again, if you guys haven't signed up for your demo accounts, please sign up, start playing with it, try experimenting. Make sure you do all your homework and then keep posting in the group so we can all comment and give you some feedback. For you guys, we're gonna actually have the guys from Finsightful come and talk to you in a couple of weeks. So if you haven't already gone and looked into them and like go check them out, they're really great. Especially if you've got big things like you've got a self-funded super fund or you've got quite a lot of allocation that you want to be able to have some advice on, check them out. And so here is the guys. If you haven't done your demo account, here's your challenge for the week. We're going to go into the demo account. We're going to apply all of those indicators in the Bybit account. If you want to challenge yourself, you could try using the TradingView as well and then see how you go. have a look at your favorite tokens. Try and find those confluences using those different indicators, like exactly like we just did on Solana there, and see if you can pick an instance of where all of those indicators are lining up to try and give you an idea of the move. And of course, I will, give me a couple of moments. I will go into the group and I will post all the quiz notes. I will post all the charts, all of the uh, all of these learning resources and the study guide, all that sort of stuff. And then tomorrow, once we've edited the video will be uploaded as well to the group. Here's just some more homework if you guys want to do some further reading. Different types of indicators. Again, there's like a million different types of indicators, and it's really just up to you to kind of experiment. That's how I found out how to use these indicators, how I use them all together. It's all just an experimentation and then finding out what works for your trading style. And there's another video for you guys. If you guys haven't checked that out again, I go into detail on how to set up all of these indicators inside of Bybit. So if you haven't checked that out, check that one out, and it will help you to set it up inside of Bybit. And I've actually got a little, here we go. I'm gonna do this little trading poll here, guys. So Bybit is actually doing a trading competition. It's called the World Series of Trading. It's going to be starting in a couple of weeks. And so what we thought we would do, see if there was any interest, anyone who wants to join our trading team. If we start a trading team, and we'll be really intensive and we'll be like sharing tips and like actually doing it for, I think it's 2 weeks, the trading period competition is. If we can get enough people, I think we need 4 or 6 people. Like we need at least a small team to kind of do it. If we can get enough people, we can create a little team, and we can really work one-on-one with you guys and do the trading challenge. There's lots of prizes. It's really good, but there's like literally thousands and thousands of people that do this. It's really cool. All thanks to Bybit, and then your Bybit, it's hundreds of thousands of dollars in prizes. It might even be millions in prizes. But it's really good. If you haven't checked it out, I clicked the link down the bottom to go learn more. If I get enough people, maybe I'll create another poll in the actual group. If we get enough people, we can try and create a team, and that would be really cool. Awesome. And that's it for this week, guys. If there's no other questions or anything else we can follow up with, you can always follow up in the group. And then again, of course, I love seeing your charts and all of you guys talking and chatting and helping to support each other. I can do that real quick. Yeah, if you want me to go through that. Just real and poll. Yeah, of course, anytime you guys have questions, just let me know. It's pretty simple to kind of do that. I'm going to go back into Bybit. Okay, so the question is that what is the difference between perpetual futures, USDT, USDC, inverse perpetual? So I, in general, trade Tether-based futures. So there are 2 main stablecoins in the world. There are quite a few, but the 2 main biggest ones, there's Tether, USDT, and there's Circle, USDC. So in general, Tether has been the basis of almost everything for many, many years. They've had a lot of controversies, but most of it has been completely debunked, and that I don't have any problem with Tether. But in general, it is based overseas in not as strictly regulated markets, whereas Circle is based in the United States. It's fully regulated, it's fully backed, it has very extensive audits done. So USDC is becoming more and more popular just because of that safety kind of idea. I don't have any problem using Tether. I almost completely trade Tether because number one, there's more liquidity. There's way more people that trade with it. And you also can use higher leverage. So in general, you're more restricted with USDC. It also doesn't have as many tokens to trade. So it is slightly safer, or well, it's probably not safer is not the better word. It's better regulated, I guess, if you want to put it that way. But yeah, in general, you have more opportunities, more tokens, more liquidity. If you're trading Tether based with USDT, but other than that, they're both stable coins. They're both exactly the same amount. And Tether has also depegged, Circle has depegged, USDC is depegged. They've all had their dramas. with any crypto, nothing's 100% perfect. So it's really up to your personal preference, what you use. I, in general, use USDT. What we also have is if you go into futures, you'll see here that's USDT, USDC, and then inverse. So inverse is actually when you're using the actual crypto instead of a stable coin. So you can trade futures using Bitcoin as the collateral. So instead of like having all of your money in Tether, you can trade with your Bitcoin and then use more leverage on top of that to trade futures on top of that. So in a bull market, it's actually really good extra way to make extra money is to trade inverse perpetuals because while your bank is going, like while the token's going up, you're also getting that appreciation in value. Whereas if you're trading with stable coins, your base amount is never actually going to like increase because it's a stable coin, it's never going to get better. But if you started the market, 2 years ago with one Bitcoin and you were trading the Bitcoin itself is going to keep going up over time while you're trading on top of it. So there is a benefit, especially in a bull market, to be trading using inverse perpetual. Um, so it's really up to you in your complete preference of what you would like to do. In a bear market, though, you're dealing with the opposite though. So you're trading Bitcoin, but it's also going down in value. So your bank, the amount that you're trading with is going to decrease over time. So what a lot of people actually do is in a bull market, they'll trade with inverse perpetuals, and then when they're in the bear market, they'll switch it into stable coins because it means that your base amount is not actually going to get smaller over time. I mean, obviously, if you're doing really well and you're shorting, it's going to go up, but the underlying amount is going to go down because Bitcoin's going down over time. So they're the big three ones that you look at when you're using futures in particular. Explain the trade information at the bottom of the screen. My trades. So yeah, these are just some trades that I've done over the past couple of weeks. So the Bitcoin one, I did start off, that was the one that I actually explained in the class. So when I got in at 112, I've sold most of it. I've sold like 90% of it. And so just like that's just what's still open. I call it a runner, to leave a runner. It's just in case it keeps going up. But then also it will give you a better entry if it looks like it's going to bounce at some point. The ETH one I literally just did. It looks like it's going to go down, so I'm actually just going to move it up. And then the WIF one is the one that I did yesterday that I went over as well. So, to give you an example, I'm using cross leverage. So if we go up here, there's two different types. We will go into this in the advanced training, but just to give you a really quick overview, there's cross isolated. They're the two main ones that we use. Cross is more dangerous because if one of these trades, if say you forgot to put on a stop loss and you got liquidated on one account, it will liquidate your whole account to cover that account. So cross is more risky. It does give you access to more leverage and more amount because you're leveraging your whole account as opposed to just a small isolated amount. Isolated is like you only will ever risk that small amount in that one trade. So say I've got like $400 in this one trade, I can only ever lose $400. But if you have a cross account, you could lose your whole account even if just that one gets liquidated. So that's why cross is very very it's not very I always use a stop loss. It's so I don't ever feel like that's gonna be a problem. But I have had whole accounts be liquidated because I didn't have a stop loss because I was stupid. So please either use isolated or just 100% of the time use a stop loss. And then of course you've got your leverage here from 1x leverage to 100x leverage. I just psychologically like using high leverage. This would be exactly the same amount if I used $4,000 at 10x, or say this one, if I did a 10x with $2,000, you're going to get exactly the same amount. So with this big account, I could be using 10x. I just always psychologically like the big numbers. So that's why I like to use the 100x leverage. But you've got to be realistic. I wouldn't use $10,000 like dollars at 100x, if that's going to take up your whole account. So that's where it kind of is like that. I am an MM. where is that? So basically here is, there you go. That's the margin, like requirements, basically. And this is your maintenance margin requirement. So at this level is where you're going to start getting your liquidation levels, like you're going to start getting your liquidation notices. Because so say I took out $200,000 in this account, I don't have enough left in the account to cover my margin. So most of the time, like this one, you don't really need to worry about. It's just really this one. This is the amount of margin that you're using for your account. You want to have a look at your liquidations. If you're using bigger amounts, your liquidation price will be here. Because I'm using such small amounts as compared to this, there's no chance of ever being liquidated because it's just not good. It's not enough. That cool. And then anything else over here? As I said, we will go over more of like the platform and like we'll actually do some more trading in the platform when we're doing the advanced trading account. But that's going to be the biggest kind of differences. Thanks, guys. Yeah. Now, if there's any other questions before we go, it's just gone 8 o'clock. So anything else, of course, always follow up in the group. If you have, again, other tokens that you want me to look up, think about it next week and we can do some more investigation into your favorite tokens. And yeah, keep sharing all your stuff in the group. If there's any other questions other than that. Sweet, thanks guys. Hopefully it wasn't too overwhelming. And you can watch it back on like half speed if you need to. Other than that, I will see you all next week. See you guys.